All right, what's up, everybody? See Lena, Sally, Alan, what's going on? Chris, David. Thanks for joining, everybody. Apologies for the very, very late night stream. But as they say, better late than never, perhaps. Bokang is here. Livy, Alex, good to see you. Happy Sunday. Beach lover, Mike. What's up, Mike? As always, we're walking down 57th Street, Billionaires Row. You can see the Steinway Tower in the distance, Central Park Tower as well. I see Proud American is here, Stash 724, and Marta. Paul K, what's going on? Trust you've had a wonderful weekend. And it's back to reality. It's back to business come Monday morning. It's pretty windy in New York. I see John. We'll give it a minute and then we'll go ahead and get started. Gene S, what's up? This is the beautiful Crown Building, which is also the Amman, New York. Stunning building. Carlos Ramos. Hey, Carlos. Should be a big week. This is the final crescendo, I should say, of earnings season. Pretty much the vast majority of companies have already reported, but we have a few large companies that are left, mainly in the retailing space. I see Kathleen says, good evening all. When that sailing ship hit the Brooklyn Bridge, I was imagining if you had been around there live streaming. Well, we were streaming, I think, at the time it hit, but I wasn't down there. But the crazy thing is, yesterday, I spent most of my day in Dumbo, Brooklyn, and I was overlooking the South Street Seaport looking at that ship. And I was like, wow, that's a pretty cool ship because it has this huge Mexican flag on it. And apparently it ran its course right into the Brooklyn Bridge, which is just a really horrible tragedy because I believe 2 people unfortunately passed away in that accident. There's a bunch of others who were injured, so it's really sad what happened. Now, I don't know what caused it, but if you tuned in yesterday, the wind was insanity. I don't really think I've ever really seen wind like this before. Perhaps that had something to do with it, who knows, but Benny Hanna says, good evening, Tom. What do you think the market reaction will be to the credit downgrade? Well, we'll talk about that today. That'll be a large portion of the discussion. I'll just give you one more shot at the, well, under construction Louis Vuitton store. But if you guys can hear us and if we are streaming in 1080p, just go ahead and give a thumbs up in the chat and we'll go ahead and get started. But yeah, right at Friday, right at the close, you had a credit downgrade on the United States. Is this going to be a large catalyst that sparks another market sell-off? Or is this going to be a real nothing burger? We'll talk about it, we'll see. I have my thoughts, I would love to know your thoughts. Hey, Samantha R, long time no see. Always a pleasure to see you. Now in the office building just to our right is Tiger Global. Big hedge fund. Hedge fund manager is Chase Coleman. And Chase Coleman is what you would call a tiger cub. Now I'm testing the internet down 57th Street because usually we can't even stream down 57th. because the internet is so poor, but it's looking like it's holding up pretty good. Anyway, this is 53 West 53rd Street. Really beautiful building. Bev Ann says we're not getting any audio. Let me see. Oh, maybe my microphone is about to die. We'll see. Papa Smurf, what's going on? If the microphone dies, we'll just live on without it. Yeah, Megan says the sky looks beautiful tonight with all those clouds. Billionaires Row looks really, really nice between the clouds here. But essentially, really the way that hedge funds started was by a gentleman named Julian Robertson. He's the godfather of hedge funds, and he hired a bunch of analysts that worked under him, right, for his firm. And a lot of those analysts and portfolio managers and traders went on to break off and start their own ventures or start their own hedge funds. And those hedge funds are nicknamed the Tiger Cubs of Wall Street. I would say the most notable, right, as of recent, is probably Archegos. I'm sure everybody remembered when Archegos almost took down all the major banks. The CEO and founder of Archegos is Bill Huang, and I believe he's going to serve a 30-year jail sentence. And I told you guys this story. I was at a business lunch earlier, I think just before the new year. And I went to Gallagher's Steakhouse with a few clients, and I go to the bathroom, and I walked right into Bill Huang. And I was like, whoa. I didn't say anything to him, but I was like, how is he here eating steak? I thought he was going to prison, but I guess he had a separate sentencing after that. But anyway, you have Tiger Global, which is run by Chase Coleman in this building right here, which has a gorgeous view of Central Park. Jean-Paul says Scott Bessent doesn't seem to be too worried about the downgrade. All right, let's get right into it. So, good evening, everybody, and welcome back to Walks of Wall Street. It's a beautiful late night here in Manhattan. It's about 8:56 p.m. according to the little bus stop over here. Weekend is come and gone, and next week, well, Monday morning, we have to head back to reality. Now, just as a little bit of a quick recap, 16 out of the last 19 trading sessions for the S&P 500 have been positive. Okay, this has been probably the V-bottom of all V-bottom recoveries for the market. And a lot of the true market leaders or the leaders are extended now, right? We talked like all week and all last week. We've been talking about a lot of those leaders. We'll wait for these motorcycles to go by. And one of the things that we've been talking about is it's very, very easy to identify the new leaders in an early bull cycle because they tend to really stick out like a sore thumb. So what do we mean by that? Well, when you have all of the major equity indices go through such a severe correction, not in terms of duration, right? Because it was a very, very short correction, but it was so severe in terms of the depth and the percentage loss on all the indices, like such a drastic drawdown. The leaders are kind of like a beach ball underwater. That's the best way I like to explain it. That's how it was explained to me when I first got into the business. You know, the leaders, the best companies in the market are oftentimes held down. You know, 9 out of 10 stocks will always follow the overall direction of the market. And it's very important to pay attention. When the overall market is getting crushed, run a screen and look for the stocks that are going down the least amount or bucking the trend and hitting new all-time record highs and new 52-week highs while the rest of the market is getting crushed, because that information is very telling. That tells us that portfolio managers on Wall Street are choosing not to sell those names, right? They're choosing not to de-risk of those names. During a correction, traders and portfolio managers on the street, they tend to get rid of the worst performing assets, right? So if you're not selling a specific stock while the whole market is getting crushed, there's a reason for that, right? So there must be high quality there. So, some of the leaders in this market thus far that have been up and out and that are already extended, extremely extended, are Netflix, Spotify, Palantir. I would even classify Uber and Robinhood in that category as well. All the ones that have really been bucking the trend and trading into new highs. I would say that the two second tier stocks are probably those like ServiceNow, Bill McDermott's company, ticker symbol NOW, and a few select enterprise software names. Now, if we look abroad, there have been some European markets doing exceptionally well. Number one European market is Germany, bar none. German DAX hitting new all-time record highs pretty much every day. Mainly powered by SAP, massive enterprise software player out of Germany. SAP, I think, making up over 16% of the entire DAX is SAP. So look for those leaders. Look for those leaders. So with that being said, earnings season has been pretty good, I would say. Across the board of the Mag 7 companies, net income profitability nearing all-time highs across the board. Last week we heard from Walmart, which is a very, I would say, particularly good company to pay attention to in this environment because of all the tariffs, right? They reported great earnings. They gave a little bit of a weaker guide and essentially said that they're going to have to pass on those tariff increases to consumers at some point, right? Which, through our president, threw a little bit of a tizzy. He threw a little bit of a temper tantrum on Truth Social, as he usually does. Not political, I'm just, kind of, pointing out. And Trump kind of rattled off and said, Walmart makes billions and billions and billions and billions and zillions, right? In Trump's fashion. They should eat the tariffs. Walmart should eat the tariffs. Anyway, apparently Scott Bessent had a conversation with management at Walmart, and supposedly Walmart is going to quote unquote eat some of those tariffs. So we'll see how the market reacts to that. Kind of as we reviewed, wow, there looks like to be something big getting out of Carnegie Hall tonight. Maybe it's some sort of recital. This is kind of nice. But if we take all the politics out of it, what drives markets? It's liquidity, earnings, sales, and margins, right? If you do a post-analysis of all the liquid leaders in the market, particularly Netflix, I think Netflix is a great example. If you do a complete post-analysis of Netflix throughout its entire career of a company, since it's been public, I want you to go ahead and you could, chart this, or you could build a model in Microsoft Excel. Margins in Netflix have gone from 2% all the way on their way to 50%. And management thinks they're going to go even higher, right? So as earnings compound out, as margins expand, stock prices generally tend to go up. So are we going to see some volatility in a lot of those big retailing stocks like Walmart, Target, Home Depot, if the President of the United States is going to come out and lambast all these companies and say, hey, any cost increases, you have to eat it? Well, what's that going to do? That's going to put pressure on profit margins. We'll see what happens next week. I will say this. If you have no material downside reaction next week, on Walmart, that is an unbelievably bullish telltale sign for the market. Because if you have the President of the United States coming out and telling private businesses what they have to do with their companies, and the market doesn't give any type of wiggle or jiggle, that is very, very telling action. So with that being said, since it's late, we'll just kind of run through this here. Next week, we're going to hear from Home Depot, I believe. You're also going to hear from Target, ticker symbol TGT. Then you're going to hear from TJ Maxx, Ralph Lauren, and Ross Stores. So pay very, very close attention to the guidance on all that. I guess I'll say hello to everybody in the chat, and then we'll kick this off and we'll do a really deep dive into the downgrade, and we'll see what the deal is there. But I see DC322, our good friend Patrice 2020. What's up, Patrice? TD as always. Ted says, what about consumer confidence? Well, consumer confidence is at some of the lowest levels it's ever been in history, which is a very bullish thing, but we'll talk about that data in a minute. Let's see who else we got in the chat. Benny Hanna, Darren, Noodles, what's going on? Larry, Matthew, Doc7, Russ NYC, Tatted T, Joe E, John Paul, Kelly, Melee, Samantha R, Leslie, Ben, Jeff in Southern Tier, New York, Dollar Bill. We got the whole crew here, and Peter. My God, Peter, what's going on? So okay, let's just get right into the topic that everybody wants to know about. Is this credit downgrade thing? Okay. Is it going to rattle markets? Are we going to test the lows? Here's my take. We're in a confirmed uptrend, and not only a confirmed uptrend, in a power trend. Okay, we've had 2 follow-through days right off the bat that worked. All of the leaders are out. All of the specific sectors in the market that we really, really want to see performing well and outperforming are doing just that, particularly the financials, the XLF. A lot of the bank stocks are performing exceptionally well. Big recovery in share price of Goldman Sachs, JP Morgan, and Bank of America, right? Those are leading economic indicators for the health, not only obviously of the financial sector, but all of the other sectors' health, right? If you don't have stability and if you don't have health in the financial sector, you don't have anything. Stocks have been acting really well, and they've been acting really, really well on volume. So what does that mean? Let's say we get a pullback next week, which might be, I mean, guys, we just reviewed 16 out of the last 19 trading sessions on the S&P 500 have been green, okay, with hedge funds and retail traders all underexposed this market, okay? If we get a pullback, and a lot of those leaders that we talked about that are already up and out and extended over their 50-day moving average, over their 200-day moving average, since we are in a confirmed uptrend after those 2 follow-through days, spitting distance from new all-time record highs, that means your first pullback to the 50 should be bought. It's what it is. The first pullback to the 50, assuming you have your core positions built, I mean, you should have been building these out for the past 2 weeks, you know, as we've been getting these follow-through days. If you see the leaders correcting to the 50, right, just from a portfolio manager's standpoint, and they pull back on normal to low volume, those are opportunities to ladder in and up and make your position sizes bigger, okay? Now that doesn't mean they're gonna hold the 50, okay? You could add on the 50 and it could slice right through it, then you just blow the position out at 7% on the additional add, right? But there's gonna be a lot of those headlines. You know, there's gonna be more stuff, I'm telling you, there's gonna be more headlines and crazy stuff to keep you out of the market besides the credit downgrade. You're gonna hear about the credit downgrade all week. Next week is gonna be something else. And the news is gonna get increasingly worse. I'll kind of repeat this. Since we are already in a confirmed uptrend, and we've allowed this market to pull us back in, we are in all the leaders. Any correction, you can use pullbacks to the 21-day moving average and the 50-day moving average to ladder up and into positions and increase your size. If it doesn't work and the market continues to fall, you blow out your add-on position at a 7%. So let's say if you at the onset you committed 20% of equity and then you're rolling in more, well, don't think about it as risking 7% on the whole portfolio, because it's not. You're risking 7% on the additional 6% add on your overall 20, right? So that's kind of how I'm playing this market. That's how I kind of foresee this market. We are in a confirmed uptrend, which means pullbacks to the 50 can be used as buying opportunities. I'm not giving that out as advice. I'm just telling you that's what I'm doing. Now, should the S&P 500 crash below its 200 moving average on really disgusting volume, then you have to risk manage and you just have to cut your losses at those 7% parameters. Peter, what's going on? Yeah, Patrice, the New Jersey transit strike is crazy. I heard about that. I don't think there were any trains running all weekend. Annie, what's going on? Let's actually get away from Central Park because it's too windy and there's so much pollen in the air. It's crazy. I mean, it was a beautiful weekend out, but the wind was so intense. You could see the wind blowing around all the pollen in the air. And the closer you get to Central Park, the more that you get. So. It's like you could literally taste the pollen in the air. It's disgusting. Let me give you guys a good shot of both 220 Central Park South and Central Park Tower. Oh wow, I'm hearing from the chat the New Jersey Transit service will start back again on Tuesday. Very cool. Now, I made a post about this on X this morning. If you want to follow us on X, it's @WalksWallStreet on X. But, I was taking the subway today. The service is just totally piss poor. The infrastructure is eroding. And I think it's time to automate a lot of these positions away, right? If you go to Japan, the subways and a lot of the train systems there are fully automated. And if you've ever taken the Long Island Railroad, Metro North, or the New Jersey Transit, it's like you still have the, what's it called? You still have like real people coming around and punching your physical tickets with these little, hole punchers. It's like it's the most archaic thing, and we're paying these people $150,000 to $200,000, and the union complains about how they're not getting paid enough. It's like the whole thing is ridiculous. It's like all of that could be totally automated away. If anybody's ever been to, Asia recently, and if you've been on any of their transit systems, you barely see any people. Like everything is automated, everything is clean, everything is efficient. Like why is this like, watching the Polar Express with a guy coming around saying tickets, all tickets, handing your physical pieces of paper, punching it. Like do we really need to be paying them $200,000 for that? So the salaries are going up every year because the unions are run by the mafia. I'm just gonna say it. It is. It's all mafia that runs it. Ask me how I know. And essentially they just bully the taxpayers into giving them more higher salaries. And it's all overtime fraud. The whole thing is just ridiculous. Anyway, if Japan and some of these other emerging countries could have fully autonomous trains, we could do it here. It's just the unions are a little bit too strong. Anyway, this is 220 Central Park South, which is just an amazing building. Look at that. This is the main valet. And then you have Central Park Tower right to the left of it. Very cool. Carl's asking about what do I think about the United Healthcare. We spent probably 4.5 hours talking about the United Healthcare thing. But I know, not everybody could be on every live stream. But look, you had a lot of insiders buying that stock. A lot of insiders buying that stock. But somebody asked me the same exact question, I think 2 days before the fraud allegations hit United Healthcare. And they were saying, hey, Tom, you is down, whatever it was, 50% in 2 weeks. Is this a buying opportunity? And I said, I don't cover the healthcare sector, but I had a buddy who's an analyst at a bank that does cover the healthcare sector and just called me about it. And he said, this is crazy that the way the stock is moving. And I'm like, okay, let me take a look at it. So I pull it up. And immediately I said, oh my gosh, this reminds me of Luckin Coffee. And if you want to see the kind of the mini article I wrote about this on X, you can just follow us at Walks Wall Street on X. And when you have a stock that pretty much goes no bid, right? Essentially selling off on crazy volume, 50% down in 2 weeks. That's not, your Aunt Sally selling that stock, right? Those are big institutional investors essentially calling the trading desk and saying, move this off the books. Just move it, blow the position out. I don't care what it gets filled at, just blow the whole thing out. And I said, when stocks move like that, there's usually something wrong, right? It's either, somebody knows that they've been cooking the books or there's some type of fraud. I said, I don't know that's the case, but I said it reminds me exactly of Luckin Coffee in 2019. And if you're not familiar with that company, it's actually a Chinese coffee company. It's a legit company, but they disclosed that they were cooking the books to the tune of about $310 million. But before they disclosed that, the stock already was down about 50% on crazy volumes, similar to the United Healthcare thing. So 2 days after I said that, the Wall Street Journal floats out this article and alleges, right, I'm using that term, alleges that United Healthcare is under investigation for criminal fraud. Now, I don't know if that's true. I don't think anybody does. But apparently they are under investigation. Now, would I be buying that down 50%? Me personally, no, because just the risk reward there doesn't really make sense to me. Like, why would I involve myself with a company that may be fraudulent and then, what if the allegations are true and then it unwinds even more? However, if you do buy the stock and it turns out everything is fine, then yeah, you'll probably make some money, but you have to kind of understand the risk-adjusted basis. So I just don't really want to get involved with it. I don't have any position in it. But I will say, to kind of your point, United Healthcare is a very, very important company here in the United States, and a lot of people depend on it. So hopefully, this is just, they were abusing some Medicaid or Medicare or whatever. I don't even really know what is the allegation, to be honest. But if there is any fraudulent activity, right, let's just assume there is, what will probably happen is United Healthcare will have to pay some sort of massive fine, and there'll be a complete rip and replace of management, and then that'll probably be the end of it. That's what I think will probably happen.
just have to use the regular audio on the camera. I'll have to charge my mic tonight. Adult, what's going on? Downtown, 54th Street. Hey adults, I'm watching you next to my mom right now in Miami, Florida. Well, I'll be in Palm Beach tomorrow. Flying out at 1 p.m. I have to take a quick trip up to Palm Beach and then hopefully back down to Miami so we could do the show live from downtown Miami. And I should be back in New York perhaps Friday. Central Hotel. And the wind noise is going to be brutal tonight for you guys. Peters of South Florida is hot this week. My brother says today was 95, the low will be 80. Very nice. Darren says, do you have a windbreaker on the mic? No, my microphone died. We'll be back at it tomorrow though, and I'll have to get a new wind guard. But I'm also working on something else because I know a lot of people can't join the what's it called? The streams every night. So I think all the topics that we talk about each night, I'm just gonna package up into a short video and I'll post it on a different channel, and maybe I'll put those out nightly. Just so if you miss a stream, instead of having to rewatch and sift through 2 hours, you can just watch a 10-minute video, which I think will probably be better. But I gotta set it up, I gotta figure it out. Hopefully travel will die down for me. Paul Brunel says, how is public transportation in Miami compared to Manhattan? I don't really think you can compare the two, because if you wanted to compare the two, which I don't think would be fair, public transportation in Miami is pretty much non-existent in comparison to New York City, right? I think everybody would agree. If you were comparing apples to apples, who has a better public transportation system, New York City or Miami? I don't even think Miami would score any points, just because it's impossible. The robustness, right, of New York City in terms of public transportation is just so, it's just totally different. I don't even think you can compare it. But what I would recommend, if you're looking for a very, very affordable and cheap way and a fast way to get around Miami, I would say just buy a little Vespa. It's the most enjoyable thing ever. Driving around Collins Avenue, over the MacArthur Causeway, on a little scooter or a Vespa. It's amazing. It's really awesome. Hey, Carol H. says, hey, Tom and friends, have a safe trip back to Miami. Thank you very much. I'll be flying out of LaGuardia. And I'm really, really impressed with what New York did with LaGuardia Airport. It's an amazing, amazing airport. Leslie says, I enjoy your live streams so much more. Yeah, this is just for people, we'll still do the live streams as normal, but I'll just have a totally separate thing and just, crank out some very easy to the point digestible videos. So people can kind of stay up to date. Kathleen says, do you ever fly out of Newark? That's a good question, and the answer is yes. But I only fly out of Newark when I do international flights to Asia. But I'm not gonna lie, I'm a little bit nervous about flying out of Newark Airport now with everything that's been going on. So I don't know if I'm ever gonna be flying out of Newark Airport again, to be honest. I mean, just the frequency of problems there. I mean, if you've been, reading all these articles and watching the news, it's like it's almost like every single week there's an issue, of air traffic control problem at Newark, another outage. It's crazy. So I think maybe I'll forego Newark Airport for the foreseeable future, and if I'm flying internationally, maybe I'll just do JFK. The trust I have in Newark Airport has really been eroded. I mean, what about you guys? Anybody who flies out of the tri-state area, do you think those concerns are valid, speaking about Newark Airport? This is a great view of 432 Park Avenue here. This is a very unique building. Yeah, Leslie says LaGuardia Airport is beautiful now. It's an amazing, amazing airport. So I usually fly American out of LaGuardia. I believe it's Terminal 8. And it is unbelievable. So impressive. So 2 thumbs up for the new LaGuardia Airport. OG says I always fly out of JFK. Old Tape Archives says I used to live right next to Newark. It's short-staffed. Their air traffic controllers are located in PHI, is what I read. Yeah, I mean, hopefully things will get rectified soon. But usually for domestic flights, I fly American Airlines. Now, for international flights, if anybody's flying to Asia, there's a relatively new airline. It's called Air Premia, and it's very cheap. You could probably get a round trip, well, depending on the time of year, you could probably get a round trip flight maybe from Newark to Incheon Airport for maybe $900, $1,100. Brad's Brain says I'd be reluctant. John Nigerian posted himself at Newark the other day. It was empty, which could be nice. Yeah, maybe a little what's it called? Counter trade there. Since everybody is scared out of Newark Airport, maybe it's actually safer to fly out of Newark now. who knows? But Brad, we were just talking about the credit downgrade and if it should be cause for concern. And essentially, here's how I'm looking at the entire situation. We are in a confirmed uptrend. That is just the reality of the situation, and those are the facts of the situation. The S&P 500 is within mere spitting distance from a new all-time record high, which means the 50-day moving average to the downside now acts as an area where you could ladder in and add to your positions to make them bigger. So, that being said, if we do get a pullback based on this news and those leading stocks that we've been reviewing and talking about come down to the 50-day in a non-erratic way, that's normal action in my view, right? Stocks go up, stocks go down. The initial move, I think, in the first leg of this new bull market has been made, which means now pullbacks to the 50 and the 200 can be used to add. And you'll kind of know immediately if those buys are going to work, because you're going to see volume come into those names and those names be supported at those major moving averages. You really have to kind of force yourself to lean bullish when the initial move has already been bullish, because what's the worst that could happen? The stock fails at the 50 and you have to blow out your add-on position. That's it. So pay very close attention to just how stocks are acting, assuming we get a correction, right? Are they coming down like United Healthcare, right, in a straight line, going no bid? Or is it more of a structured sell-off, lighter volume? Maybe we get a 10% pullback in Netflix. Maybe all the leaders come down, 10 to 15% over 2 or 3 weeks. That's fine. That's like normal bull market action. That's how I'm framing this. 16 of the last 19 trading days on the S&P 500 were green. If this, news rattles the market, we'll see what happens. Gary's, this is Radio City where they filmed the Ed Sullivan Show. I don't think so. I believe they used to film that at the Ed Sullivan Theater, which is on Broadway. Now, the Ed Sullivan Theater is now home to Stephen Colbert and the Colbert Report. If you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. Now, there was an interesting article this weekend in Barron's that were kind of talking about the most winningest stocks in history since 1987, right? Because essentially what they were doing is doing a little bit of a comparative analysis. 1987 stock market crash was very jarring, right? I wasn't even born yet, but very jarring, and then the market moved on. And the most winningest stocks of all time, I wrote them down. I'll just name a few. And this is since 1987. So Home Depot, Apple, Costco, Oracle, Microsoft, Monster Beverage, Texas Pacific Land. Now, Microsoft had a 217,000% move. Okay, I'll say that again. Microsoft had a 217,000% move, which is kind of crazy to think about. And the reason why it's important context is because there are companies out there right now that are not even public yet, that when they do go public, they will go up 217,000% as well. So the innovation cycle never stops in the United States, and it will never stop. You know, the United States of America is the beacon of free market capitalism and capital creation. And if you think that, you know, the best, you know, the U.S. and innovation peaked in the 90s or the 2000s, I just don't think that you're paying attention. I'm not sure if you heard about the Microsoft OpenAI news, but they really want to change their partnership, and their main goal is to have OpenAI go public. And if you don't think we're going to get more and more of these pure play AI companies going public in over 30 and 40 years, these things are going to go up 217,000%. They are. You know, they just are. Just think about and just kind of do a post-analysis of what your life was like in the 80s and 90s and what it's like now. Just how easy and more efficient things are in that short span of time. Right? Think about how far along the internet has come since Windows 95 until now. Okay? So from Windows 95 and from dial-up until now, think about what it's going to be like in another 20 years. It's going to be unbelievably nuts. So it's just good to kind of conceptualize that, particularly around, you know, points in the market that are a little bit scary. Because the reality of the situation is that there's always going to be something to be worried about. And there's going to be more 2008 financial crisis, right? There's going to be more, you know, tariff tantrums. There's going to be more, you know, terrorist attacks that spook people out. There's going to be more wars that pop up all over the place. But so long as the most important thing stays intact, which is the free and fair markets of the United States, and capital is welcome in the United States, well, then this is going to be a never-ending stream of opportunities. This is 46th Street, Avenue of the Americas. Raven says AI and crypto may be the future. Well, I agree. You know, I was reading this article, the cover story of Investors Business Daily this weekend, and I wrote a little bit of a blurb about it on my X page. And it was all about, they were interviewing a bunch of wealth managers and financial advisors about, you know, what is the best way to hedge your portfolio for inflation and how should you be preparing for retirement. And I read the article, I actually read it twice. And it was all of these financial advisors telling their clients to downgrade their lifestyle, to sell their house, move into something smaller, don't take as many vacations. What else did they say? They said buy tips. They said increase bond exposure. You know, all the... Oh, and they said delay Social Security benefits. So everything essentially was, you know, from what I was reading. We'll wait till this guy goes by. So from what I was reading, I just can't stand just the noise of those pedicab guys blasting the ridiculous music. There's too many of those guys all over. So essentially, kind of from what I was reading, the main advice that financial advisors and wealth managers give retirees is mentally prepare yourself to have a declining quality of life, essentially, right? You could read the article yourself and just play it very, very safe and buy bonds, and live off of a fixed income, maybe delay your Social Security payments a few more years so you can get a couple extra $100. And not once did they ever mention, getting long or getting some exposure to digital assets, Bitcoin and the like, when that is probably going to be the sector that outperforms and drives the vast majority of alpha over the next 20 years. And I was writing kind of a blurb on X saying that's how early we are in this stuff, right? You're going to have a time where you pick up Investors Business Daily and you're reading about all the wealth managers and financial advisors talking about how to prepare for retirement when you're in your 40s and 30s, and they're going to be recommending a 5 to 7% allocation to Bitcoin, digital assets, and that space. It's just coming. It's going to happen. They're always behind the curve on it. But I think as of recording this video, I think Bitcoin's trying to break out to new all-time record highs again. I think intraday we hit $107,000. You're starting to have the biggest institutions in the world build out trading desks and derivative desks and market making desks for the digital asset space, right? Citadel is investing billions of dollars in intellectual capital to make markets in cryptocurrencies. I think Durbit is set to be acquired very, very soon. Let's just get past 42nd Street. And you just had Galaxy Digital list on NASDAQ, which is right here, on Friday, right? Mike Novogratz's company. And there's a kind of an old saying in the hedge fund business that when everybody's, when everybody is in agreement on something, right, your opportunity or your probability of generating outsized returns or alpha goes down significantly, right? So when everybody is kind of talking down Bitcoin and digital assets, saying, oh, it's a passing fad, it's a Ponzi scheme, it's not going to work, and you see the fundamental story of it improving, that is when you have the highest risk-reward ratio, right? You don't have to commit a whole lot of capital to get exposure to this thing to generate outsized returns. But when you have, this thing go mainstream, which it's going to go mainstream, and you're going to have the Fidelities, the BlackRocks of the world, all the wealth managers recommending a 5 to 7% allocation to their clients, by that time, Bitcoin's going to be $250,000, right? It's still probably going to compound out maybe at 15 to 20% a year. But by that time, it'll be $250,000 of Bitcoin, right? And I've been seeing this, for some context, since 2014, 2015, when you had Tom Lee, a Fundstrat, going on CNBC talking about Bitcoin when it was $1,000, and he was getting laughed off CNBC, right? They didn't even take it seriously at $1,000. I remember when Bitcoin crossed $1,000 for the first time, watching it live. So it's just interesting, right? There's a lot of things that seem obvious, when it goes mainstream. Obviously, 2020 is in hindsight, it's 2020. But there will become a time when a lot of these retirement planning articles will have, we recommend a 5% allocation to Bitcoin and digital assets. That time is coming. Mark my words. But once you see those articles, you'll probably have $250,000 Bitcoin. Raven Poe. This is Bitcoin at 104,000 now. Hopefully crypto has a good bull run. Well, I mean, hopefully it has a good bull run. It's already had a good bull run. I mean, just read your own comments. $104,000. I mean, just think about saying that for a second. Because I remember, I used to be in all these internet chat rooms back in the day, and we would always make these memes, about, the new Bloomberg headline is that Bitcoin crashes to $80,000 a coin. And now those headlines those memes are actually a reality, which is crazy. Because this stuff used to be a couple $1,000s when I was buying it. When I was in college, I was in the computer lab in college. We would sit there, we would cut class, we would build like little stupid games in Pi Game. I'm not sure if anybody's familiar with that, but you could go in Pi Game and like screw around and build stupid stuff. And yeah, just good times. All right, let's head over to Grand Central Terminal. Studied a little more. I honestly probably should have. That is one of my, just to be honest, that is one of my regrets, is not studying hard enough and not studying the right stuff. Because I really didn't have much direction. I mean, my family growing up, we didn't even really know about college. Like, we were just like, I guess I'll go. I think if I had to do it all over again, I probably would have been a computer science major with a minor in finance. That's probably what I would have done. Oh, you see all this? Look at all this. That's exactly what I was talking about. You can actually see the pollen falling from the trees right here. Type usernames is funny. My regret is the opposite, studying too much. I mean, I wouldn't say it's my biggest regret, but it's one of my regrets. Just because now, in hindsight, I mean, I wouldn't go back and change anything because I think everything's meant to happen for a reason. But just knowing what I know now, I would have probably taken a slightly different path. But I mean, look, I'm not complaining. Old tape archives says high school should put emphasis on the time value of money. I never heard that term once in high school. You know what's just hilarious, and you're probably going to laugh at this? So when I was in high school, I was in all the remedial classes in, at least that's what we call them in New York State. Like accelerated learning. Like I had to, have a little, I took a little bit more time than all the other kids to like get concepts. I was dyslexic, still am dyslexic. But I wouldn't say I got picked on, but kids bust each other's balls. Because I took this course called business math. And business math, and this is in the context of New York State. So maybe, I don't even know if the class exists anymore, but I'll tell you the story. All the kids who would take business math were considered like the idiots. Like you're stupid. And I remember in business math is when I really started my like love for the stock market and finance and entrepreneurship, because we would watch, Shark Tank. And at the time, this was, my God, this was a trillion years ago. This was like 2013, 2014 or whatever, I don't remember. And, we learned like how to balance, how to make your own personal balance sheet. We would download like SEC filings and go through it. We just learned like basic real stuff that you would learn, that you need to know in the real world. We literally learned how to do our taxes in there. We learned how to write a check. We learned how to analyze businesses. Is it a good idea to start this business? Is it a bad idea to start this one? Why or why not? We learned about the stock market. Why companies go public, why do they issue shares. But that class was considered like the idiot kids would take it. But looking back on it, that was the only class in high school that actually helped me and like where I got like a big ROI. And I heard that the course isn't even being offered anymore because the enrollment was so low. But that was a very, very fun class. Looking back, I'm like, that was really the only fun course that I took in high school. It was called business math. Which was essentially like accounting, talking about the markets, why the companies go public. Anyway. Wow, 456 as Bitcoin just had its highest weekly close ever. All right. Good stuff. Good stuff. Now, one of the kind of topics we were talking about a long time ago as it relates to Bitcoin is the SOB 121 rule. And now that that's completely gone, big banks and institutions are going to be able to go into the Bitcoin ecosystem, and they're going to start to create businesses around it. You're going to be able to, collateralize your Bitcoin. So let's say if you have, $10 million worth of Bitcoin, right? You'll be able to go to Goldman Sachs. You'll be able to go to JP Morgan Chase, Bank XYZ, and you'll be able to post your Bitcoin as collateral, and you can get cash at an interest rate, right? Same thing like with stocks. Which is funny. I actually remember vividly us talking about this in business math in high school. One of the examples was, well, rich people, if you have a portfolio of $10 million worth in stock, and let's say you want to buy a house for $2 million, well, it wouldn't be advantageous to sell the stock to buy the house because you could have more upside in the equity, right? If you own the S&P 500 and you know that the S&P on average goes up about 8% a year, well, why would you want to sell that stock to buy a house when you could just go to your bank and say, hey, I'm looking to buy a house. I have $10 million worth of stock. I'll post this as collateral and give me money against my stock, and then I'll buy the house. Now you have all the upside of the equity, and now you can also buy your house. And it doesn't create a taxable event. This is going to be the same thing with digital assets, okay? And this is going to be a big boom for banks. You'll be able to post collateral, and I also think in the future, it's going to be the tokenization of the world. Everything is going to be on chain. And just go check out some of the interviews with Mike Novogratz, who just listed on NASDAQ, Galaxy Digital. But that is the future. It is going to be pretty fantastic. Michael Wooten says, or you could use Ethereum and not trust Goldman Sachs. Isn't that the point of crypto, to get away from the banks? Not a big fan of Ethereum. I don't own any. But I definitely get your point. Definitely get your point for sure. Joe says, do you think ChatGPT make students in high school and college smarter? Oh yeah, of course. And I've been hearing I've been reading some articles about how there's some teachers and high school teachers that are really reprimanding kids for using ChatGPT and Perplexity AI, Microsoft Copilot. I think that's a very, very wrong frame. You never, ever, ever want to bastardize a kid for being curious, right? You want to let that curiosity just run and go on a tear, right? So if the students are using ChatGPT, right, show them how to use it in the appropriate way, right? These are tools that we're gonna live with for the rest of our lives. So you shouldn't ban that from the classroom. If anything, you should encourage the appropriate use of it, right? Because if you have a kid, high school student using ChatGPT, using Perplexity, understanding AI, maybe they, even build their own programs because, if anybody codes or is a coder, it is so much easier to be a software engineer now with Perplexity, ChatGPT, and all this stuff than it was, when I was in high school and in college. So if you have, student ABC, right, or student A using ChatGPT, and then student B not using any AI tools, student A is going to just run through student B all day, every day. It's not even going to be close. And when you get into the real world, when you go apply for jobs, work at a company, who do you think a company is going to want to hire? Somebody who's familiar and comfortable with using AI, or somebody who's fresh out of college and they went to a high school where AI tools were banned and they don't know how to interact with AI or use it to their advantage? Well, I think everybody knows what's pretty obvious there. So I would say full steam ahead with AI tools. You always want to lean into technology. Right? Everybody should be experimenting with Perplexity, ChatGPT, Grok, all the above, really. Because if you think about it, we're not going backwards, right? The world goes on, the economy goes on with or without you. So if you want to put a handicap on the kids, be my guest. But in the real world, the businesses and the companies who adopt artificial intelligence are going to be around for the next 20 years. The businesses who don't are not going to be around in the next 20 years. And even Jensen, one of the wealthiest men on the planet, CEO of NVIDIA, says the same thing. Says that businesses who are leaning into AI will be around in 20 years. The ones who don't probably won't even be around in 2 or 3 years. Anyway, I think we'll end it here, just because it is getting a little bit late. And I do have to get up early tomorrow morning. But we will be live tomorrow, live from downtown Miami, starting at 8:45. If you enjoyed it, feel free to leave a like on the video, subscribe if you're new, and have a wonderful week. Have an amazing, successful Monday, and we will talk to you all tomorrow. So Josie, appreciate it, type username Robert, Richard Scott, Russ NYC, Paul Brunel, thanks very much. Paul K, DC322, Leslie Peter, New England Crypto, Chloe Muhammad, Lisa, and Joseph Hardaway. Take care, everybody.